Happy Red Friday, you brilliant borrowers. In today's video, we will be talking about all those amazing rates you see advertised out there. Billboards, radio ads, mail pieces, your neighbor next door. Rates are amazing right now, and we know you want them. So we're going to explain exactly what you need to do to get that super low rate. Hey everybody, it's Eric with Low VA Rates. It is of course Friday. You know that because I'm in red. Red stands for Remember Everyone Deployed. Please click the subscribe button, which is also red by design, down there on the right so that you can follow along with us here on YouTube and become even smarter and more educated as time goes on. Let's talk about how these advertisements work. Usually, the mortgage interest rate that you see advertised online or in the mailer or on the radio, it's the lowest of the lows. That's just what gets people's interest, right? So in order to qualify for that kind of rate, you're going to need you're going to need to meet all sorts of requirements and likely be this perfect veteran borrower who fits in this box. And we're going to talk about that. You got to meet certain sets of criteria and conditions. Number one, credit score, okay? Credit score. Probably the most important part in getting that ultra low interest rate. In many cases, your debt to income ratio, okay? This is not necessarily the case on all VA loans, but certain lenders are going to give you a better score the stronger you are. High credit score, low DTI makes you stronger. Your loan amount and the term that you choose to get. When I'm talking about term, I'm talking about 30-year versus a 15-year or a 20-year. So loan amount and term go into play to secure that absolute lowest interest rate. How about your down payment? Even though it may not be required to get that ultra low interest rate, it may be, okay? Down payment. Put that on there. And then ultimately, discount points or buy down points. That's the most important part. Discount points, okay? They're all important, but we're going to focus a little bit on that here at the end. Let's talk about each of these conditions, and in turn, we're going to see what specific metrics you'll need to meet in order to normally get that advertised rate that's the lowest of the lows. Number one, the credit score you'll need for a certain interest rate. Even though VA loans don't have a set minimum credit score requirement, lenders are still looking at that score in order to help determine the rate that you're going to qualify for. And I need to make I need to make one thing clear. When we're talking about the lowest rate, it is possible to get the lowest rate even if you don't have the best of all these things, but it might cost you more. So either way, if you want the best of the best, which is the lowest rate and the lowest cost, the stronger you are in these areas, the better off you are. So in order to qualify for the advertised rates that you see, you're going to need to have pretty excellent credit, which is generally a 740 or higher. Here at Low VA Rates, once you're above a 720, you start qualifying on credit score alone for some of our best interest rates or the lowest cost for those rates. If your credit score is below a 740 or a 720, or depends on where you are, you could potentially decide to try and improve that before applying in order to get the lowest rates out there. As always, keep in mind, you don't want to focus so much time on making yourself the best possible borrower if it's going to take so long that interest rates go up and the rug comes right out from under you. So there's this teeter-totter going on. I need to strike when it's hot, which is right now, but do I also have time to put myself in the best possible position? If you're not going to buy or refinance until the future, then by all means, start focusing on these things right now. Your debt to income ratio, okay? The lower that debt to income ratio, the more likely you are to qualify for the best possible interest rate. Just like on the credit score, the VA does not typically have a set DTI requirement. But if you look in all the fine print on these advertisements, you're usually going to see a pretty low DTI needed in order to qualify for that advertised rate. For many lenders, the best rates are reserved for borrowers who have DTI ratios below 43%. Now, if you're carrying a heavy debt load, you're going to want to pay off some of that before you start looking into getting your mortgage. Number 3, right here, loan amount and term needed for an advertised rate. When you see a low advertised rate, as I've mentioned, look at that fine print. Often it may say this is only for people borrowing $350,000 or higher, because the more you borrow, the more money the lender can make. So they're going to advertise the lowest possible rate, but in that fine print, they may indicate you have to be borrowing a certain amount of money. They may also specify that that is a 15-year rate, and you don't want a 15-year loan. Or maybe it's a 20-year or a 30-year. Look at the term needed to get the interest rate being advertised. Whatever the fine print says, you're going to have to meet that if you want to nab that absolute lowest interest rate. Now, not all lenders list these kinds of details in the fine print of their mailers, websites, or ads. But I'm telling you right now, they have to if they want to be compliant. So if you're dealing with a lender that doesn't have the fine print, easily accessible, beware. It's important to disclose all of those variables. Number 4, the down payment, right here, needed for the advertised rate. You guys know this if you've been watching. VA loans do not require a down payment. However, it is a pretty common thing for lenders to offer better rates to borrowers who choose to bring some money to the table in the form of a down payment. And that's because the down payment reduces even further the amount of risk the lender is taking by giving you a loan. Now, in the mortgage world, the less risky someone appears to be, the better the reward, which is normally, in return, a lower interest rate or a less costly, less closing costs for that rate. So if you really want these incredible rates that you see advertised right now, you might consider making a down payment if you're buying a home. No down payment needed on a refinance. 5, I told you this was very important. Discount points, sometimes referred to as buy down points, needed for an advertised rate. These discount points basically allow you to choose to pay additional closing costs in order to bring your interest rate down. Now, I'm not quoting rates right now, but just for an example, perhaps the rate advertised on a flyer or on a billboard happens to be, it's a funky looking too, 2.25%. That's the interest rate. There's always an APR right next to it. If there's not, beware, because from a regulatory standpoint, if you quote an interest rate, you also have to quote an APR. This is just for example purposes right now. In order to qualify for this lowest interest rate, right, you might have to pay discount points. Let me give you an example. Maybe the going rate is 3% with a 3.21% APR, but this is the one being advertised. Well, if you pay, let's just say, 1 discount point, which is the same as 1% of your loan amount. So if you're borrowing $350,000, we mentioned at the beginning of this video, in our example, $350,000 loan amount needed to get this lowest possible interest rate. Well, 1% of that is what? It's $3,500. That's a 5. $3,500. So if you add an additional $3,500 into your closing costs, you can pay that out of pocket, or you can roll it into your loan, or if you're buying, you can have the seller pay that for you. We've talked about that in other videos. Then, in this example, you would qualify for the 2.25%. If you say, hey, forget that, I'm not paying discount points, well, then guess what? You're not going to get this ultra low interest rate. You're still going to get a great rate, but you're not willing to pay the discount points. Now, on VA Streamlines, which we are experts at here at Low VA Rates, every single year we end in the top 15 to 20, 25 lenders nationally on VA interest rate refinance reduction loans, or Streamlines. We set our loans up to where you can generally get the lowest possible rate if you're willing to pay up to 2 discount points. Now, if you've got a great credit score and a low DTI and a high loan amount, maybe it's not going to cost you 2. That's why I said at the beginning, even if you're not the most qualified individual here, you can still get the same rate as someone who is more qualified. You just might pay a little bit more in discount points. On a VA cash out refinance, you can finance your discount points into the loan as long as you do not exceed 100% of the home's appraised value. Remember though, if you choose to pay discount points on a cash out, that will reduce the amount of equity or cash that you can take out of your home. So I hope you've learned something today. Interest rates are amazing, and we expect them to stay amazing for quite some time due to the situation in the country and the economy. Just make sure before you're tempted to call on a flyer or a billboard or a radio ad, make sure you meet the criteria needed in order to get that ultra low interest rate. And if you don't, not all hope is lost. There are still amazing interest rates out there for people who are not the creme de la creme. The majority of our borrowers are not at the very high of all of these situations, and we still get them extremely low interest rates. So call us. You can text us any hour of the night. You can just apply online, but we want to hear from you when you're ready to take advantage of these low interest rates. We're here to help. Thanks for watching. We'll see you next Friday.